Hey guys, TommyBryson. Now, welcome back to the channel. And right now, the stock market is on fire. Like, it's literally burning up. Things are not looking good. And everyone is saying the same exact thing. And everyone is putting fire on all of their thumbnails on YouTube. It's kind of getting crazy. Like, everything is on fire, even on YouTube. But overall, the stock market is crazy down. And I love this quote. I always think about it all the time. And it says, if you want fish, go where the fish are. If people are already there, go somewhere else. You'll probably get some there, okay? But right now, if I go on Yahoo Finance, my favorite website ever, I'm not sponsored, I just like Yahoo Finance, and I click here, everything is bad. Inflation is bad. Oh my gosh, red, 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 red. Everything is red. But one thing I used to love to do was, whenever things were red, I would scroll down, all the way down to where it says, losers. And right here, guess what you have, guys? You have over 1,500 different companies that are basically suffering right now, including Coinbase, including Snapchat is on here, DraftKings is on here, GameStop is on here. There are a lot of websites right now that are basically, what? 11%? So there are a lot of websites a lot of stocks right now that are basically down like crazy because the entire stock market is down. And whenever that happens, it weighs down a lot of good companies. So this used to be the pond I used to go to get my fish, to get a lot of companies that are basically suffering right now that I can buy for a massive discount and make some more money later when the stock market does go up. But the main purpose of this video is to give you an update, to let you know exactly what is going on with the stock market, why exactly is it down, what you should be doing, and also what am I doing personally, because as you know, I also have a lot of money in the stock market. So it's in my interest to keep updated with everything and to also pass it on to you guys, okay? So as always, like this video, and on top of that, also if you're new here, subscribe to keep up to date with all stock market information and also the news stuff. Now, first things first, guys. What's going on is very simple. And I gotta give you some background first, although you probably already know this, okay? But right now, the Fed is basically threatening or saying that they're actually going to go ahead and hike up the rates. This means that if the rates go up, it becomes more expensive for banks to borrow money. And when that happens, companies basically stop spending a lot of money, and so do we, because it becomes more expensive to borrow money, and the economy starts to slow down. Now, why would the Fed want this to happen? The answer is simple, because inflation came back to be around 9.2% or 9% exactly, if I'm not mistaken. Now, this is awful. This is terrible, because it means that if you had $10,000 under your mattress, you lost like $1,000 in value just like that because you didn't spend anything and because you were saving. Now, this gets very scary. So in order for the Fed to go ahead and say, hey, we want to slow down this economy because there's so much cash and abundance out there and people are just buying things up. Prices are going up like crazy. Economy is going up too high, too fast. That creates inflation. That's not good because that can result basically in a recession. Then we get into depression, and that's not what we want overall. So in order to go ahead and slow down the economy, what they do is they raise the rates. And by doing this, things start to slow down. But also at the same time, the stock market might jiggle a little bit and it might crash a little bit. And that's what you're basically seeing. Now, I always find this funny because all the Fed is in charge of the monetary policy in America and in the US overall, right? They can't really control anything because, and I say that to say this, okay, Tommy, yes, they can't control it because it works. You can see it right here. I get that. But there was this thing that happened back in Japan where they tried to also play with the monetary policy when their economy was basically trashed completely, and they did whatever they could. They made it so you couldn't even save money because you would basically lose money, and the economy was not moving. So that's why it can come to the point where no matter what trick they use, it might not work. It's like whenever you go to like a circus, and you have like this man with a whole elephant and a lion controlling them with a small leash. Like, you're controlling them because they're not aware of what's going on, but once they know, they can basically end your whole life right there. So my point is, it becomes very important for the Fed to act fast and to do things correctly, because if they don't, you don't know how bad things can really be. And although this right here is pretty bad, and we are getting into bearish territory, and that means basically we go into 20% deficits in the stock market, and that's not great. But you know, it has been so bad before in the past when it has gotten to not just like, oh my gosh, the stock market is down 20%. That's not a big deal, okay? 20% is not a big deal. Opportunity is great, but the problem is 20% for 25 years. And back in the 1929, I think it was, the Great Depression, when that happened, it lasted around 25 years, where the stock market did not recover for 25 years. And that's not what we want. And that's not what's going on here. So don't get any more scared or create more anxiety. Just understand this, okay? What's going on right now, the Fed is most likely going to raise the rates in order to slow down inflation. And that's very important because that also helps us in a way. And on top of that, when they do that, the stock market is going to basically start to kind of crash a little bit. But eventually what happens is the economy starts to stabilize and you see like it starts to slow down and kind of just slowly pick up some speed in its own right, so it doesn't go too crazy and it doesn't go too low. It's kind of like what you want is not something that's super crazy or super depressed. You just want average, normal, chill. That's what they're looking to get. And you can never get it exactly, but that's what they're trying to get. So my point is, don't be scared. Just understand what's happening. Now, one big question that I know I'm going to get is basically, well, Tommy, if this is happening right now, what should I be doing right now, right? What should I be doing with my personal money? Well, I always ask myself these three questions. The first one is basically, can you control the Fed? The answer is no, so don't worry about it. Can you control the stock market? The answer is also no, so don't worry about it. Now, can you control yourself, what you do with your money, and also your earning power? The answer is yes. If you try really hard, you can control all of those factors. So my advice would be, control your own factors. And what you do with this is very simple. You got to understand that whenever the stock market is down like this crazy low, it creates a lot of buying opportunities. Like I showed you right now, there are a lot of companies right now that are losing a ton of money, but they're great companies. And all the stock market is down and things look red and things look gloomy, and YouTube, everyone has like fire in the thumbnails. I might put some fire in my thumbnail, who knows, okay? But the idea is, all the things look this bad, maybe in the real world, you still have your job, you're still making good money, and everything's basically fine. So if you do have some extra savings, it might create a perfect buying opportunity for you to go ahead and buy some investments right now. And by the way, you know what I did today? Like I always do on Mondays, I went ahead and I bought me some stocks, okay? This is not a lie. Check it out right here. I'm going to show you guys right now. Right now, I got notified. Hey, Tommy, guess what you did? You went ahead and you bought some investments right here. And also you got a package or whatever. But I buy, you know, and I buy all the time. My rule is I buy 10 to 20% whenever I get paid, whether the market is up or where the market is down, because I invest into index funds, and overall these things will not really matter when you talk about 10, 20, 30 years into the future. And one big thing is you got to understand is that whenever you put money into the stock market, you're buying a ticket, right? Well, not really a ticket, but you're investing into a company, and the only time you really lose money is whenever you sell. As long as you're basically holding that investment for the long term, you understand it, you comprehend it, you'll be just fine. And what I'm doing personally is I make sure whatever I invest my money into, I understand. I make sure I create automation. So I invest automatically 10 to 20% of my money into my investments. And if you want to copy my portfolio, the link is down below. But one big thing that I do have to say is this: if you are picking investments and being a stock picker, this creates a lot of opportunities. So all the title says, stop buying, it's going to get worse, oh my gosh. The answer is, right now is the perfect time to go ahead and buy. But I would only buy if I can buy. And if the money that I have to buy, I'm not going to need that money right away. Because I do believe, potentially, this could get worse for longer. And if it does get worse for longer, you just want to make sure the money you did use for this is not money you need basically tomorrow or to pay next month's rent. That is the whole idea. And last thing is this, guys. Nobody knows how long this will last. Nobody knows how lower the market will get. And lastly, it might be worse, might be not, who knows. But my point is, although we might be making videos about this stuff, overall, nobody really knows. If everybody knew about this stuff and somebody really had the secret, they wouldn't tell you because they would just basically make all the money. So what you can come to conclusions basically based on history, here's usually what happens. The market has cycles. It happens all the time. People go crazy about it. It's normal human reactions. What you should be afraid of is a whole different animal, and I'll talk about that later maybe in another video. But for right now, if you do have extra money to invest, or if you are already investing, don't stop investing. Because investing right now are these little opportunities that create big gains for your future growth in the future. Okay? That's basically it. Thanks for watching, guys. As always, like, subscribe, hit the bell so you're notified. Comment down below any questions. And if you disagree with me, comment down below, let me know. If you have things you want to be updated on, comment down below, let me know. And as always, like, subscribe, hit the bell so you're notified. Up here is another video. Here's my face. Click and subscribe. And as always, long-term team officially out. Follow me on Instagram at TommyBryson.